Firstly, just on the session today.
A pretty good session for the Aussie market. We were only down a touch by 0.1%, and that compares to a 0.5% loss on the US market, with some good volumes going through. About $4.5 billion worth of stock are being traded. It's quite interesting where we finished up as well, 5,425.5 points, just a touch below that golden ratio, or the 61.8% Fibonacci level of the low that we saw in 2009 and the high that we saw of the market in 2007. So it does look like the market's still struggling with that golden ratio, or the 61.8% level. So the next few sessions are going to be quite important. If we continue to see a bit of consolidation here, it could be the start of a correction. It was all about the banks today. We saw NAB shares really weighing on the market today, down by 2.5%. But the banks have had a fantastic run. ANZ's up 35% in the year to date. CBA's up 24%. NAB's up 45%. And Westpac's up 34%. So we did see a bit of a correction. Macquarie also in focus. Stock down by 1.6% ahead of half-year numbers tomorrow. But because it was all about the banks, outside of the banks, we saw every single sector trading higher. And in fact, the banks, because they are in the large cap index, if you have a look at the small ordinaries and the mid cap index, we actually saw outperformance, with the small ordinaries up by 0.4% and the mid cap index up by 0.6%. We saw the defensives definitely outperforming here outside of the banks, but altogether I think it was a pretty good session for the Aussie market.
Yeah, and for the month I think we're about 4% or so, not such a bad effort, Julia.
It is quite a good performance for the month, up 4%, and that compares to an average monthly performance so far in 2014 of just 1.4%. And this month it really has been about the banks. The financial sector is up by a massive 5.9%. In fact, once again, it's been the defensive part of the market which has outperformed. It's been financials up by 5.6%, the healthcare space, which is up by 4.5%, and then the telecom space, which is up by 4.3%. But every sector has managed to gain in the month of October, so it's been a pretty good one. And I think the iron ore miners are also worth a mention. We're seeing Sundance up by a huge 44% during the month. We're seeing Mount Gibson Iron up by 21% and Atlas up by 19%. On the downside, though, a lot of the worst performers on the ASX 200 were also miners. We saw Perseus down by 21%, Whitehaven Coal down by 19%, and Acrox down by 19%. But the only thing with October is, while we saw a good performance, volumes have been extremely light. It's been the slowest in terms of the value traded for the month since January 2013, at the beginning of this year. And of course, January, a lot of the market is on holiday. So the average value of stocks traded per month in 2013 has been $88 billion for the ASX 200. And in the month of October, we've only managed $77 billion.
Julia, it's Martin here. How are you doing?
Good.
What weight do you put on your Fibonacci number? As you know, I'm not technically minded as you are. I'm really looking at the fundamentals, and it does seem to me that, particularly overseas, we're starting to see some really strong earnings growth coming through, where a lot of results in the US and Europe are beating analysts' forecasts, and these bank results here in Australia are doing the same. So is that really where the true momentum is going to go for the market?
I think there's been two areas of the market which have been driving the Australian share market to 5-year highs, and that's the banking space together with the material space. We're still seeing some great production reports coming through from the likes of BHP Billiton and Rio Tinto, some of the biggest stocks on our market, and then combine that with the big four banks, and that's really where the momentum on the Aussie share market has been coming from. Now, the banks have been coming out with some stellar results. I mean, ANZ, we saw the cash profit up by 11% when it reported its earnings on Tuesday. And then today we saw NAB coming out with its earnings, and it's managed to see its cash profit growing by 9%. So we are seeing almost double-digit growth for the bank's profits, and we're seeing record numbers coming through. But I think because the banks have run so hard, there are some valuation concerns, as there are valuation concerns around the market. We're seeing a PE ratio of around about 18 for the market, and if you have a look at the last 10 years, that is where the upper end of valuations have been. And traditionally, we do see a bit of a pullback from those 18 levels, and that is the upper end of the range over the last 10 years. So a bit of concerns about valuations, but of course if we continue to see earnings rising up, then those valuations will automatically come down. But I guess the biggest threat to this rise that we're seeing in the market at the moment is that we don't see those earnings materialise until a later time, so later than what the market expects.